Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments for Tuesday, December 3rd. As I came walking in here, we got a little bit more defensive with our marketplace, particularly the beans and the meal. Had a little bit of a reversal day yesterday, making new highs for the move, but then closing with lower lows for the move, and once again a down reversal day. We're seeing a little bit follow through. We got the beans down around in the neighborhood of around 7 to 9 cents, the meal market down around $2 to $3. What's been permeating in the corn market is also permeating a little bit in the bean market, that being China. China's had corn market a little bit on the ropes here of late as far as the storyline goes, canceling and or rejecting cargoes of U.S. corn because of GMO material being found in it. And now the trade is getting a little bit nervous, not so much as far as GMO goes for soybeans, but if we continue with a good South American crop, and we find out that prices are going to start to come on down, as a result, is the trade getting a little bit nervous about the fact that the Chinese may now start to cancel some of these high-priced beans. So there's a lot of Chinese news going on, not so much on the pro side of imports, but on the pro side of non-imports, and it has the trade a little bit nervous, particularly when we saw the commitment of trade report come on out yesterday and found out that the spec trade in the meal and in the beans added to their net long positions. And so as we go forward in here, we'll keep an eye on what's going on with the Chinese interest in beans, along with sales in general, as far as the competition starting to get closer and closer from South America. Nothing really new in South America in the sense of any adversity. We're still seeing the crop getting planted down there. The weather is still being fine. The expectations for near record crops both in corn and beans. So no big bullish storyline there. We did see that yesterday in the commitment of trade report that the spec still has a net short position in the corn. But as we were talking about, if we're starting to lose a little bit of the corn export business around the world, China in particular, and also with South America coming on with a crop, that in conjunction with the ethanol numbers perhaps being somewhat stymied by the EPA ruling, we're kind of once again not getting the speculator nervous being short the corn market, particularly with a 14 billion bushel crop sitting out there, and thus the weakness in the corn market making new lows for the move yesterday. In wheat, maybe a little bit better news here this morning in the sense that Egypt's out for a tender. We did find out that we're still cost competitive. We'll see if we can't get any of that business. We've been struggling with trying to find some demand, but we didn't see many offers coming from Russia, Ukraine, Romania, and or even the French, so we'll see if we get any business there. But once again, to go and try and rally the market in any big way, we did have ABARE come out of Australia, raise their wheat crop. Canada's going to be out tomorrow. Expectations for a bigger number than what they previous had as far as a record large wheat crop goes. So pretty much like the corn and the beans, we're finding out that trying to sustain a rally in an environment where we're seeing more and more supplies come abound and or other people still trying to stay competitive, it's just going to be tough to have any type of sustained rally and or continue to remain in a non-bullish environment. So anyway, the big key would be maybe to keep an eye on the beans and the meal with the reversal days yesterday. They are the most high priced. That's where the trade is still long. And as we work our way forward, if we find out that we're starting to lose our business to South America, it may not be too supportive for those longs that are still in the marketplace. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.